Hey, it's Steve Ryder with Keller Williams and Ryder Realty Group here today with more real estate conversations.
And this is Genna with Supreme Lending, taking the emotion out, and let's talk about some logical solutions in today's market.
I like it. Let's do it. So, Genna, tell me, why should I buy now with rates as high as they are, which historically aren't really that high, when you look back. But why should I buy now instead of waiting for rates to dip? I mean, you always hear, well, the rates are going to come down, and we've talked about that a little bit already, and how rates are going to drop. But we don't have any way of knowing that, especially from, when you're listening to the mainstream media, you just never know. So why should I buy now as a consumer rather than waiting for rates to dip?
I think that there's two main reasons why it is always a better time to buy now than later. Okay. Your first is, and this is where I'm going to look to you for some of your expertise, is on average, how much does a house appreciate per year?
The average rule is 3.5% to 4% per year in a normal market.
Okay.
Which is what we're seeing right now, basically.
Okay. So in a normal market, we're looking at 3.5% to 4% per year. So for every 100,000, you're looking at an increase of 3,500 a year. Okay. So if the question then becomes, if I'm looking at the same home, okay, so if I'm looking at a $300,000 home now, that means that in a year, that $300,000 home is going to be worth closer more to $312.
Right.
Right. So the break even of saving the money on the purchase price versus saving the money on the rate, you're going to end up paying for it one way or another.
Right.
Whether it's an appreciated value for that same type of property, or whether it's in a rate environment. Me personally, and what you can start to see anytime that there's a shift in the market, I would much rather owe less money with a higher rate that can be refinanced in the future than owe more money with a super low rate that no matter what, I can't refinance to help eliminate my expenses.
Right.
The other concept of going ahead and buying now is, Steve, what was the market like in 2020 and 2021?
Crazy.
The market was pretty crazy.
Crazy.
If you didn't have a home to sell, if you had a home to sell, you had an issue getting your offer accepted because of contingencies.
Right.
But if you didn't have a home to sell to tap into that equity, to be able to offer above asking price offers on homes, you were also in a tough position where we saw offers. What was your highest above asking price offer that you saw get accepted?
Probably about 45, I think 45,000 above list price.
Okay. I think the other concept is our lack of inventory, because that is our reality, regardless of what's happening in interest rate.
And it's been that way for the last probably 3 years.
Right.
And we're not trending upwards on that because of what we're talking about.
Right. So when there are so many people now that are waiting on the sidelines for those rates to drop.
Yes, they are.
For every 1% that rates drop, another 5 million buyers will hit the marketplace. Okay. So right now you have a competitive edge. You can negotiate. A buyer can negotiate a lot of terms even in their favor in today's market.
Right.
Whereas when those rates drop, your negotiation options are going to be limited. You better be coming to the table with more money above asking price. You better be signing an appraisal gap based off of the appraised values. And we're going to see another big jump in inflation. Everyone needs a home.
It's going to happen.
It's going to happen.
It's going to happen because, as we're sitting here today, we're in this general area of Gwinnett County, Barrow, Jackson, Walton County even can be included in that. You're talking about a month and a half to 2 months of inventory across the board. And for that to be, a normal market is 6 months of inventory. A normal market means that if we had, no more homes that went on the market, it would take 6 months to sell what was actively on the market. Well, we're at a month and a half, 2 months of inventory right now. And for that to increase by even, a month to 2 months of inventory, you're talking about a lot of people getting into the market, right?
Oh,
Sell wise, and even including new construction. New construction is a big part of that because you got to be able to build houses and keep up with that inventory. So what I'm saying is it's going to take a long time for that inventory level to increase. And if we go back to what we had 2 years ago, it's going to take twice as long, if not 3 times as long, depending on how long that lasts.
Right.
So it's going to be, when rates do start dropping at that point, it's going to be really tough as a consumer in the real estate market again, just like it was 2 years ago.
Right. Right. And we all just lived through that world. So we
rough.
lived through the world that was given a slight pause from rates climbing.
Right.
But you can look at, even in a higher interest rate environment, there's still multiple offers on properties. The reality is that people have to have somewhere to live.
That's right.
So as soon as those rates drop again, then people are going to want to tap into that equity opportunity more. They're going to go and put in multiple offers, and you're going to, again, find yourself overbidding for that property again.
Yeah. And right now, currently, at least our experience has been in the last 6 to 8 months, we've had a lot more people that not necessarily have to sell and buy. They're either selling and then renting something because they see the potential of the market, or they're moving out of state where they already had another home, or maybe moving to the lake or something like that. So we're not seeing the same type of client that we saw a year and a half, 2 years, 3 years ago. We're just not seeing that.
Well, I think part of that is the ability to work remote has changed our entire economy.
Yep.
Right. That there's so many people that now have the flexibility of remote work that there's a lot more moving outside of the normal suburban cities or their little honed in area that they're in.
Absolutely. Yep.
It's just changed our buyer's market in that aspect.